Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, February 21st, 2024. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. A little bit lower here early in overnight and pre-market trading. Just 19 points of range for the ES, 41% of average. This market's been averaging 46 points on a 10-day basis and 61 points over the last 5 sessions. Again, right now trading just 19 points of range at the moment. And one thing you'll notice is, again, the uptrending behavior of this market has been quite strong. We are inside the bullish Pima trigger zone right now, and while we have started lower here, any 2-day pullback, any multi-day modest pullback has led to another round of strength up ahead. The most recent example of this was here, but it failed to make a new high, and that's leading to another pullback right away. But again, this could still lead to another bounce as this thing continues to remain range bound throughout the course of this month so far. Any pullback, even as deep as the previous session's low, could be defended by bulls for a pushback up the range the rest of the session. Keep an eye on intraday VWAP here. Any push through intraday VWAP, currently 49.82s, could open up strength the rest of the session to the upside. A failure to hold the previous session's low could open up a bit more weakness here into the previous week's lows down below, which would be this pivot right here. But again, not expecting this thing to fall off the map here, but keeping an eye on the previous session's low for early signs of further weakness. If we can find an early low to begin the day here, we could have a move that bounces this thing back up through the previous session's midpoint for a 45 to 50 point move here on the day. So again, keeping an eye on the previous session's low for signs of rejection. Watch intraday VWAP for any push through that level that could open up some strength. Any failure to hold this level could open up the previous week's low. Now taking a look here at the NQ, a bit more weakness as well, very similar to the ES. This one is already below the previous week's low price at the moment. Again, another narrow range day heading into the RTH Open, 106 points and 42% of average range right now. The early idea, again, looking for a strong early low. If you can find a morning low, that could open up things back to the upside. This market could be looking at a range today of about 250 points, maybe as high as 300 if it can get going to the upside. A failure to hold the previous session's low, and you're working your way down into the FOMC key level below, which is right around the 17,384 level. Overall, this market continues to remain strong as well within the uptrending market. But again, any failure to hold this low could continue to stretch this market down a bit before we see some sort of turnaround. Again, after every 1 or 2 day pullback, we have seen this market roar back to the upside here ever since the beginning of the year. So not anticipating a massive 3-day sell-off here. If this market does fail to hold the previous session's low, then we may work down a bit. But given the overall uptrending market, at some point bulls expected to come back to defend and push this thing back to the upside. So still watching for signs of a strong morning low that could turn things back up the rest of the session and push things through the previous session's midpoint. Taking a look here at crude oil. Crude with a down day in the previous session. This one's still having range-bound price action here. Up a day, down a day, and watching the previous session's low here. It's trying to stand on that low at the moment. Today could be an up day within the range that takes us back towards 78 to 78.50. Overall, this market remains within this box. 1, 2, 3, 4, 5, 6, 7, 8 days within this box here as it continues to develop the large rounded bottom pattern. This huge rounded bottom at some point expected to release to the upside and perhaps go get the 91.5 target. That's the 100% target of this larger key range. Still building out though between 74 and 79 until expansion happens. So again, range bound at the moment in this smaller range. the ability to reclaim the previous session's low could open up a return back to the previous session's midpoint at 77.65, and then perhaps a continuation higher toward the previous session's highs into the 78.50s. Looking at gold right now, gold is mostly flat at the moment with an uptrending bias in the very near term. This thing bounced off the 2000 level and has now returned back to 2040, the midpoint of the larger range that spans up to 2080. It's an 80 handle range here, and again, if price can push through 2040, it opens up 2080 up above. Failure to push through 2040, and we may stay in the lower half of this range for a little while, kind of like it did before, where it stayed in the lower half of the range and then made them move to the upper half, then stayed in the upper half and then dropped into the lower half. So 2040, the key level here, still an upward bias, but really needs to get through 2040 in order to open up the upper half of the range into 2080. Lastly, taking a look here at the YM. The YM right now stuck in the center of its own range. You can see this range here, 39K here. You have about 38.1 here, and right at the center of this range is about 38.5, and that's kind of where we are right now, stuck trading around the FOMC key level, which is 38.606, and hasn't really seen much movement outside this range. We do have this high and that low that kind of sets the edges of the range. We're stuck at the center, and we could continue to see some chop here back and forth with an upward bias until proven otherwise. Again, market structure really fails at about the 38.1 level. Once price fails there, it opens up 37 down below, but until then, we're still stuck in the range, and any drop into that zone could still be a buying opportunity until proven otherwise. Not really looking like it wants to break out of this range right now, and the fact that we're stuck at the center doesn't really provide a whole lot of edge at the moment. If we drop a little lower, it could provide a bounce. If we rally here, maybe there's a continuation that could happen, but stuck at the center of this range, so look to avoid the chop until proven otherwise. If price can push through 38.6, that opens up some upside here back toward 38.7 and perhaps a bit higher into the end of the day. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.